Look, the US is still going to keep most of its tariffs on most of its imports from China. So in that respect, not a lot has changed. But one thing that, of course, will be changing shortly is that China will be buying more product from the United States. Now, what that means for countries like Australia is that they may lose market share in China to US companies. And the one that really sticks out to us is that LNG exports from Australia to China may suffer as US LNG exporters increase their market share.
So are we really back to where we were pre-trade war, or is there really something to gain here for both sides?
Look, I think the deal is largely one-sided, where the US will be selling more to China. As I said, China still faces a lot of tariffs on its exports to the United States, so that hasn't really changed. There was a wind back on the September 2019 tariffs from 15% to 7.5%, but they didn't exist in 2017. And of course, the 25% tariffs on around 250 billion Chinese exports to the US, they're still there. So look, there is going to be some changes to global markets. I think it's a small positive for the global economy, but it's only small. And we still are working out all the different trade diversions that may be happening, which is going to be a partial unwind of other countries like Australia that have gained market share in the China market.
We have heard the word stability being thrown around in the last few hours. What are you expecting as Asian markets begin to open there this morning, and what are you predicting as far as potentially more international reaction to this?
Look, I think you might get a little bit more of a positive reaction, but only a small amount. So you may see Asian currencies appreciate a little bit, but I don't think it's going to be the major driver of Asian currencies this year. We're still looking at things like inflation and interest rates and the strength or otherwise of the global economy, and of course current account balances. They're going to be the major drivers of currencies in our region, rather than this trade agreement between the US and China.
Looking ahead to a phase two, do you think there's any urgency at all to start work on that, and what issues would you expect both sides to tackle next?
Look, President Trump has already said several times now that he doesn't expect phase two to be signed before the US election, which is almost at the end of 2020. I think that's right. All the issues that couldn't be resolved, they're going to be dumped into phase two. They're the contentious issues, particularly on forced transfer of high-tech products. I think these, because they're so contentious, I think it will take quite a long time to reach an agreement, if an agreement can be reached on these issues.
And we have about 30 seconds left, Joseph. If you had any observations from the signing ceremony, what were they, and what do you think the messages were from both sides?
Oh, look, I think the message is that the tit-for-tat era hopefully is put behind the Chinese and US officials. But look, it wouldn't surprise me if things were to bubble up again, because one thing that will be really important this year is to what extent do both sides stick to their agreement. And we may see some difficulties in those particular issues, particularly Chinese commitments to buy an extra $200 billion of US product over the next 2 years.